Welcome back to Midcap Radar. Well, Brigade Enterprises recently reported their Q4 numbers. The company saw their pre-sales and collections surge on a year-on-year basis. To discuss this and more, Pavitra Shankar, Managing Director, Brigade Enterprises, joins us now. Thank you so much, Pavitra, for joining us. It's a pleasure to have you on the show. First up, as far as FY25 was concerned, we understand that it was marked to a certain extent on account of various delays when it came to regulatory approvals coming in for project developments. First up, have most of these issues been resolved? How did it impact project launches and development in FY25? And secondly, please update us on the timeline, likely size of the upcoming hospitality IPO as well.
Yes, so thank you for having me. I actually think we had a pretty good year. Despite the delays in approvals that we did see impacting our portfolio, especially in Bangalore. That said, we were still able to pull off very good numbers. Basically, the approvals delayed some of our launches from happening within the financial year. Some got pushed beyond the financial year of FY25, but we will see those start coming into our pipeline in the upcoming 4 quarters. So last year we had actually intended to launch about 12 to 13 million square feet of residential space. We were still able to launch almost 10 million square feet of residential. And in that, we were able to sell almost half of whatever we did launch that reflected in our last year's pre-sales as well. So overall, we were still able to do about 7 million square feet of sales, which value was around 7,800 crores of pre-sales value. So yes, there was some delay in the launches. There is still some amount of delay when it comes to approvals, but we are working through them and able to bring our projects to the market for launch. And when that happens, we're still seeing very good demand from customers across the board, whether it is mid-segment, upper mid-segment, and since we have also launched multiple premium and super luxury projects in our portfolio, we're seeing very good demand for that as well.
Sure, Pavitra. Hi, this is Vamakshi joining in. If I understand this correct, like your pre-sales stood at 7,850 odd crores. This has far exceeded the guidance that you had started off with earlier. So what is the outlook that you're looking at for FY26 on the pre-sales as well as the launches?
So yes, last year the number was 31% increase on the previous financial year. Typically, we don't give guidance, but we generally say we like to show at least a 15% growth year over year. And I think this is something that is a good number, especially as the base keeps increasing, and we'll aim to do something similar year over year. Of course, as we go into different markets, say Hyderabad and Chennai, where a substantial amount of our upcoming launches and pipeline will be there in those 2 markets, in addition to Bangalore and Mysore, we will see that number keep changing depending on the mix of the kind of product that we have as well. So it's not just in terms of area, but also in terms of value that we're looking to see the numbers grow.
Pavitra, just a follow-up, what is the update as far as the Hospitality Ventures IPO is concerned? We understand you have the approval on board now. Can we expect it to launch in FY26? And how does it alter your debt picture?
So I will have to actually maintain that since we received the approval for the DRHP back in October, we're still under publicity restrictions and we're not able to speak too much about it.
And, just coming back to the business then, what is the expectation for further land acquisitions, especially in the southern markets? How much land is there available, for this? And what would be your, strategy, especially in the southern markets beyond Bangalore?
So Bangalore has been our home turf, but in the last couple of years, we have launched projects both in Chennai and Hyderabad, which is testament to the increasing levels of business development we've been doing in both those markets. As recently as yesterday, we closed a transaction in Chennai for a very prime parcel, about almost 5.5 acres in a very good locality in Chennai, and that should give us around 2,000 crores of gross development value for a residential project. So I'm happy to say that in Chennai, our position is very firm as one of the leading developers in the residential space. We also have commercial and hospitality spaces in Chennai. Hyderabad, we launched a project called Brigade Gateway in Neopolis. It is a mixed-use project, and we have already sold 1 million square feet of that. It was extremely successful in terms of the way it was absorbed by the market there, and continue to have another 1.5 million square feet for launch in Chennai in the coming pipeline. Sorry, in Hyderabad in the coming pipeline. So going forward, we hope to see greater contribution from both Chennai and Hyderabad, maybe 20 to 30%, depending on how much we can launch and sell in the next 4 quarters to be coming from those 2 markets. Of course, we still expect to have a strong showing from Bangalore. We also have a few smaller projects coming up in Mysore. But again, our focus is on southern cities, and we aim to continue to do that.
Pavitra, you just alluded to Chennai plans. Yesterday, you went ahead and signed that project. Could you reiterate the GDV or the potential over there? And also, have you bought this particular property from the Rane Group? Because we understand that is where they had significant land as well.
No, this is not from the Rane Group. It is 0.8 million square feet is what we have planned to build there. And I think I got the number wrong. It's actually 1,600 crores in terms of GDV. Right. I mentioned 2,000, but it's 1,600 crores.
Understood that. So going into FY26, you have a pretty strong launch pipeline. Could you break up, the launch pipeline for us for Q1 and Q2? What is it that the street can anticipate? And also give us a sense of how demand trends are panning out. We did see a lot of registration-related delays, but has demand remained steady, especially as far as, demand from IT is concerned?
Yeah, so for the next 4 quarters, we track it on a rolling 4 quarters basis. Our total pipeline for launch is around 16 million square feet. Around 12 to 13 of that would come from the residential sector, and the rest from our lease portfolio in that order. In terms of quarterly breakup, it's a little difficult to say. While we are planning internally, it's so heavily dependent on approvals, which is why we look out on a 4-quarter basis. But going forward, I think the next few launches will come from Chennai and Bangalore, and towards the end of maybe the first half of the year, probably also Hyderabad. So and Mysore as well. So actually, we're fortunate. We're in a position where all 4 of the cities where we have a very strong presence will continue to see these launches. In terms of demand, we've seen an amazing run-up in terms of demand and pricing, especially in Bangalore and Hyderabad, and supported by Chennai over the last 2 to 3 years. That's also been the reason why we've pushed into more of premium housing in certain projects in these markets, while overall we look at mid-segment to upper mid-segment in residential as a whole. That said, the demand for premium housing is very good, but I don't see pricing continuing to increase at the rates that we've seen over the last couple of years. Also, in our portfolio, especially in what we would call the mid-segment, where the ticket size has increased dramatically from what used to be 1.5 crores was seen as a very good mid-segment ticket size. We've seen that number cross 2 crores. The time taken by customers to make those kind of decisions is definitely taking a little bit longer, but that does not concern us, or that does not sort of give us cause for concern, because we still feel that they are coming to the table. They're very strong, pickup in terms of leads. There are a lot of walk-ins coming into the site across the board. So we're still seeing people interested. They do take a little longer to convert because naturally the ticket size is more than what we've seen. In terms of your question on IT, despite whatever people are talking about, whether it is in terms of the impact of AI or in terms of the hiring of IT services companies, we've seen still our typical customer is from a tech background. I would say it's shifting more towards people who work in GCCs. There's a lot of embedded technology and digital transformation work that's happening across almost every company. And we're seeing a lot of those kind of profiles. So Maybe 10 years ago, a lot of the demand was your traditional IT services firms, but now we are seeing that shift to, homegrown companies, GCCs, and so on. So it also means that the customer is a little more, able to afford some more highly priced product as well. So these are the trends that we see.
Right. Thank you so much for that, Pavitra. Thank you so much for joining in with us after your Q4 numbers. Wish you luck for the quarters ahead. That was the management of Brigade Enterprises. They're saying they expect 15% year-on-year growth in their pre-sales, and they still see very strong demand across the mid, upper and premium as well as the super luxury segment.